This video is all about how to finance your very first real estate investment property. We're gonna dive deep, so here we go. Okay guys, this is all about how to finance that very first real estate investment property. And depending upon your situation, you may be trying to do a fix and flip, you may be trying to do a BRRRR, you may be trying to do a wholesale type deal. It just depends. But one of the easiest ways to get financing is through hard money. The concept of hard money isn't that it's hard to get. The concept is that the loan is done based upon the hard asset. So rather than looking at your credit scores and your debt to income ratio and how much time you've had on your job and how much money you make and all those things like a traditional lender is going to be looking at, what a hard money lender is looking at is how much are they going to be lending on the property and how much is the property worth. Now, typically they're looking at this on what's called an after repaired value, meaning what is the property going to be worth once the property is actually fixed up, rather than an as-is value, meaning what the property is currently worth. So a hard money lender is typically looking at the futuristic value based upon repairs being done on the property, rather than looking at what the property is worth right now. That's why a hard money lender is going to be the best way to finance that first deal. Another reason why a hard money lender is going to be the best way to finance that deal is most people don't understand that a traditional bank cannot loan on a property that's in need of work. So let's say that the property has a torn up driveway, or the kitchen's been bashed in, or that it's in really bad condition and the carpet all needs to get pulled up. Those types of things won't qualify the property to get a loan from Chase or Bank of America or any of those types of banks or credit unions, because what they're making sure is they want to make sure when a homeowner buys it, they're not going to have some major thing wrong with it. As a matter of fact, FHA is going to do an inspection on the property, and appraiser is going to look at things and say, does he think the roof's in good shape? Does he think that there's sloping away from the property so there's not wood to earth contact? Those types of things. Now, this does not substitute a full-on inspection, and they make you sign documents so you understand that. But basically, when the appraiser's there, he's looking over to say, is there anything that looks really bad? Are there breaker boxes that are missing? Is there problems with the roof? Is there siding missing? Those types of things from just walking around. They're not getting on the roof, and they're not getting down in the crawl space or those things. That's basically what the appraiser is doing. And if it doesn't pass that, then the lender's going to say, I'm sorry, we can't do the loan. So the seller's going to either have to do those repairs, or they're going to sell it to somebody who's going to pay cash or get a hard money loan. See, that's where hard money lenders thrive. Hard money lenders are doing deals that don't qualify for bank financing, and then they're selling them, they're giving that money, and then whoever's buying it is fixing it up, and they're selling it to somebody that does go and get bank qualified financing. So if you're looking to get started on that first real estate investment deal, the best thing you can do is find a good hard money lender. And when you do that, you want to understand what the hard money lender is looking for in doing a loan. What's their maximum loan amount? What types of loan to value are they looking for? What properties do they like? What properties don't they like? What are they charging? Those types of things, so that when you go out there and find a property, you don't find properties they are unwilling to lend on. I'll give you an example. When I first started in real estate, I spent a lot of time, months, went out there and found a property. I was super excited. And then I went and called a bunch of hard money lenders, and they all said, I'm not interested in that. And I said, well, that doesn't make any sense. So then I spent more time finding other properties, and they weren't interested in that. And finally I said, okay, what will you do? And once I understand what they wanted to do, what they had an appetite for, and what they want to do on a continual basis, then I went and looked for those properties. And as I found those properties, it made it a heck of a lot easier for them to say yes. And so that's why I would say, if you want to get your properties financed, that first real estate investment deal, find a hard money lender. Find out what's going to take to lend to you. Make sure they're a true hard money lender, meaning an asset-based lender, not an individual lender. Now, it's not going to be uncommon for a hard money lender to want to check a few things. For example, some things we want to look at is we want to make sure there's no collections. We want to make sure you're not in a bankruptcy. Make sure you don't have a bunch of charge-offs. The other thing is we want to do a background check to make sure you're not a criminal or you have some big felony or something on there. But other than that, it really just comes down to the property and those loan to values. And we look at the after repaired value. Some hard money lenders look at the as-is value. If they're doing that, you're going to have a substantial amount of cash to close to make that happen. Most cases, people don't have that substantial cash to close. And so I've put together an entire video on 100% financing and ways to get 100% financing. So you're going to want to check that out. I'll put that on the screen and link it in the comments below. Because really, if your hard money lender is lending on the after repaired value of the property, that's going to help you get a higher loan amount, which is in turn going to help you bring less cash to close. Now, as you're funding these deals, you're going to need money for the purchase. You're going to need money for the rehab. You're going to need money for the closing costs. You're also going to need money for the payments. And this is back to another question where you're asking the hard money lender, how do you handle monthly payments? Do you require me to pay monthly, or do you accrue them, or do you take them up front and make them part of the loan? Will you actually loan on those payments to make it easier for me to get into a deal? It's a really important question. One of the things we do is accrue for that up front, which makes you don't have to make payments for the initial term of the loan, which is really, really helpful when you're dealing with a hard money type situation on a fix and flip. So those are the types of things that I think are really important to be looking for as you're trying to do that first deal. And it starts with finding a great hard money lender.